This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today is edition of Back Roads of Illinois. We are bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on a Wednesday. I'm Cesar Delgado on today. The cattle markets and the demand for right now in the markets is getting trickier, but how about demand for right now in labor markets? We're going to talk about that with Ross Baldwin from agmarkets.net. And he is starting with the harvest season in Northeast South Dakota and watch the commodities markets, especially in uncertainty. We were talking with duwany Bussey from Bulk Marketing LLC. He is getting ready for this harvest season for right now. This been Back Roads of Illinois. He is starting with the harvest season in Northeast South Dakota and watch the commodities markets, especially in uncertainty. We were talking with duwany Bussey from Bulk Marketing LLC. He is getting ready for this harvest season for right now. Otherwise, duwany, how are you today?
I'm doing real good. Like you said, it's getting to be that time of year, getting ready for harvest. So the guys are getting the equipment ready a lot. I'm mostly in the office, do the little odd jobs, mow some ditches, mow the yards, things like that. But we got like 1/4 of soybeans ready to go over in Minnesota on our small acreage over there. I think we'll probably do that either like Friday, Saturday, something like that. So we'll be able to get our legs stretched and get out in the field a little bit, which will is always fun no matter what the season.
Great to hear that. The weather has been good as well.
Yeah, it's really nice right now up here. We got really wet this summer, maybe a little too wet. I know rain makes grain, but when rain makes a pothole and, and water stands in the pothole region I farm in, it'll actually take some crop away. So we got too wet this summer, so I'm not really that excited about our yield prospects up here. A zero is a zero when you get going. And just last week, waters were starting to recede. It was starting to look a little bit better, but we got a little, well, 2 to 3 inches of rain, which isn't a little, not this time of year. So we're kind of all up wet again. There's a lot of water out in fields, but as far as like right now, today, yesterday, oh man, it's just gorgeous out. The sun's out. We're a little bit warmer than normal, so it averages out. We had too much rain. Maybe I'm kind of holding out hope for a really dry, nice, warm, long fall so we can get the crop off.
Duanya, how are things in the fundamentals on this grains markets for this afternoon before the harvest season? Could we start to talk about that?
Yeah, absolutely. No, different for each commodity. Let's start with soybeans. That's one that's been in the news a lot here recently. Fundamentals, I mean, we're going to have a large crop, but I think the yield is coming down, maybe ever so slightly. I'm part of a large yield group forecast, so we see a lot of yield results. Yields are still pretty good for soybeans, but I don't know if we're as high as USDA has it. So I think the yield could trim back just a little bit. Supply isn't horribly burdensome with our ending stock around 300 million bushels. But what is bothering the markets is the demand or the lack thereof of export demand to China. Last week, I got to tell you, I was kind of expecting a pretty good conversation between President Xi and Chinese President, well, Trump and Xi. I thought we'd come up with some framework of a trade agreement with US and China. That obviously didn't happen. So badly is like, wow, is China ever going to buy? They usually buy 25 million metric ton from us, or that's what I would have expected this year. As they're trade negotiating, of course, they're just not going to buy any soybeans from us unless they absolutely have to. They'll use up their reserves, they'll buy from every other country. So the fundamentals in soybeans are kind of bearish right now, not because we have this huge supply, but it's because we don't have good demand moving forward.
Do you have some thoughts about the corn markets for technicals buying in play without any of these prices?
I really like the corn market, honestly. I'm glad you went there because that's the one that I'm kind of bullish. Those yield reports I had mentioned before, they're coming in quite a bit lower for corn. Remember, USDA is at a 186.7. They were as high as that 189 area. I'm at a 180 right now, and even wondering if that's still a little bit too high. Quite a few producers in key states like Illinois saying that their yields are lower than a year ago. And to me, Caesar, when we've got this record amount of acreage, it's 98.7 million acres planted. That means there's a lot of fringe acres. So not the very best of the best acres in the US. So I'm starting to think it's really going to be hard to be 180 bushels. So that obviously then I have yield with yield lower, supplies lower. I think demand is great. My ending stock is all the way down to 1.8 billion bushels versus USDA's 2.1 they're at now. Now remember, as that yield comes down, USDA probably has some room in feed and residual to lower demand there as well. They could as much as 200 million bushels. So that'll offset a little bit. And they're not going to do that all in 1 month. It's going to be a slow process moving forward. But I like export demand. I like the corn market. The problem is if beans are going to be an anchor, the corn market is going to have a hard time rallying back up to the highs.
How about deck corn for right now?
You know, if you've got old crop corn, it's obviously time to move that. We've seen the basis actually up here, which has been historically really bad in the Northwest, Midwest, I guess I could call it. Let me just say the Dakotas. The corn basis has started to move just a little bit. I think they thought there was more corn left out there, but I think it has finally moved. It's moved obviously in the I states. So we're just getting a little bit of corn coming off of the new crop now. I think a lot of that goes straight to the bin. Some of it goes to town. No problems right now, but the trade has been talking about this monster crop with all these acres, even if I'm right on lower yield, you're still talking a huge crop that's coming, and we're gonna have issues storing it all. So the basis towards the end of harvest is probably going to get a little bit wider. But like I said, I question how big the crop really is. I guess we're going to find out moving forward.
Yeah, it does seem pretty uncertainty on the yield.
It sure does. And that's good. That'll get the market hopping around a little bit.
We know that we're seeing the lowest price in the grain sector and livestock markets is higher than expected, but do you have any concerns that we are going to be in farm crisis or unstable markets?
You know, that's a great question. I think crisis is maybe too strong of a word. We we're in an industry that evolves around supply and demand. So we're going to have times where the supply is low and then the price is high and then for farmers the return is good. This will probably be the third year of what I would call maybe diminishing returns or negative returns. Last year probably being the first negative one, and this year another negative one, where the year prior just a little bit neutral. Um, and it starts to weigh on everybody, no doubt. I don't know if farmers are really in a crisis situation. Before these last 3 years, we had some really good years. I would hope we've got some, say, money in the bank can get through. But I will admit, with expenses the way they are to put these crops in the ground, it doesn't take long to burn through a savings account. That's for sure. Um, and I don't, yeah, like I said, I don't think it's a crisis, but it's definitely a downturn in economics, and we got our or in revenue. And let's remember that the lower these prices get or the longer they stay down here, the more demand we will generate. You look at corn, for example, another export sales flash this morning. It seems to happen when we're down here. Mexico keeps buying our corn. The value buyers are out there. So we're just going to find more demand and more exports. And then eventually, if we find out the supply isn't that large, it's too late to turn around. And these markets can be really different, really come even middle of January. I look for corn prices to be quite a bit higher near, and then maybe we avert the crisis.
Do you feel worried about some things are looming like this trade deficit and the interest rates, inputs?
Yep, you're exactly right. Yeah, there is a huge concern there. And it's when you put it all together, right? The huge input costs, okay, and then you combine that with the high interest rates. So if you've got to borrow more money because of the high inputs, and then you got to pay that much more back in the fall because the interest rates are higher. So it kind of snowballs on itself. So, like I said, I don't think we're in a crisis yet, but we go through another year like this. I think it'd get really nervous and and probably be in that crisis state. Of course, we're all wondering, and I don't know if we're even wondering anymore. There's going to be probably some sort of bailout package for producers, and I know most of the guys out there don't want checks that way. They'd rather just get more for their commodities. But like everyone else, I'm a producer, and I'll cash that check when it comes, and that may help producers get by, and it actually might support the markets a little bit too. If these checks come before Christmas time, or say before the end of the year, then maybe guys hold corn and soybeans in the bin a little bit longer, so farmer selling might dry up a little bit, and we can get a little bit more of a rally moving forward. Slow inflation down, and then we're going to have to raise interest rates again. Now, I'm not an economic expert on those fronts, what I would call the outside markets, but those are my concerns.
Let's look at the feeder markets. How is the February feeder?
The feeder cattle market is just unbelievable, really. Back, forth, all over the place. We rallied, if I can talk about the October 1st, we rallied up to that $370 area, right? And then we've pulled back, and it looked like we had made a high, and maybe we still have. The market started to establish a downward trend line. Now, just the last couple days, we shot through that downward trend line on this news that the Mexican border might be closed much longer than we anticipated. We still have the tariffs on Brazilian beef coming into the US, which of course is a lot cheaper than US beef. So we can't mix that in to cheapen up the products in the grocery store. So now the chart looks, I'm going to say confused. There's not really a downward trend. We're still haven't taken out the highs from a couple of weeks ago, so it doesn't really look bullish either. So this market's kind of all over the board a little bit. What I would say, Caesar, is that these are historically unbelievably high prices. So I do urge producers out there, cow-calf guys, feedlot guys, be protected because you just never know what's going to happen in this market. Do I think meat supplies stay tight for years to come? Absolutely, because I don't know how we grow this herd in the US anymore. I had a good conversation with a grower this morning. We both agreed that there's just not a lot of young people that want to get into the cattle market. Either you were born and raised in it and love it, or you're not going to just fire up and start when you get done with college wanting to be a cattleman. So I think the herd size stays close to the same. So fundamentals are always going to be bullish for cattle moving forward. The problem is the funds are so long this market and they own such a huge percentage of the longs that if they want out, if they just see something else that's a better investment, say the corn yield drops to 177, they decide to buy corn, they'll exit these feeder positions and buy corn. That alone could make that market dive hard. Or say, what happens if we get screwworm in the US? How will the media spin that? Is that going to be like a mad cow thing all over again and the market just dives down? I mean, we could drop $100 in feeders and it wouldn't surprise me. And it would still be a high price, actually.
about NW. S for this week, but how about the Packers bids for this weekend north?
I I haven't heard much yet this week, and that's a great question. So right now, the cattle on feed report showed that we are actually starting to gain a little bit of size here in the feedlots here as far as the overall numbers. So there's more cattle that'll be slaughtered up here north. Where we're short is in Texas, and I'd say extremely short. Now that's because of the Mexican border being closed. Cash cattle last week, I'm going to say on an average was around 138, 138 and a half in the north, maybe just a 240 in the south. I think cash is, I think we'll be somewhat lucky to be steady, but I know I've got bulls saying that cash is going to be $2 higher, but box beef is lower this week again. We're $32, $33 off the high. So of course, if Packers can't make as much money, they don't want to pay any more for cash. So I'm going to take the easy road out and say steady at best, and just a little bit concerned that it could be $1 lower in the north, but could still be $2 higher in the south. So then the futures market is going to be kind of confused itself and wonder which one it's going to follow. And even though I'm a commodities broker, I'm going to be confused as well. I'm going to wait and see how the market reacts to something like that.
Sure. What is your final thoughts on the quarterly report on Friday?
You know, the quarterly report should be, I don't know, I'm going to say it's probably bearish, especially when we look at like the corn market. I'm afraid all signs are pointing towards we had more corn supply than what USDA has been telling us. So I'm looking for a little bit bearish report there, but boy, I'm hoping I can be surprised and they keep the low numbers.
Do you like to share anything about this cattle markets?
Yeah, well, they're fun to watch. I'll say that as a trader. The spreads have been interesting lately. So when I say spreads, the difference between the cattle contracts, if you're a really big time bull market, you would think the October cattle would be above December. But some would also argue that the last few years, these spreads have acted completely backwards. When we're really bullish, the back months are leading the front. And that's kind of what we have now. Um, Let me jump over to the feeders. Recently, the August contract, like August 2026, has gained a lot back on the front month. That's kind of got me wanting to hedge, calves that haven't even been born yet. Go out as far as you can, sell that market, buy LRP, things like that. Like I had said before, I just like really being hedged and protected because these are great prices. That as confused as I get watching markets at times, that I do know that the cattle guy is making money. So especially the cow calf guy. So there's money there worth protecting.
Thanks, duwany. I enjoyed our conversation for today.
I no, thanks for having me. I always enjoy these conversations. Great questions. You usually have me scratching my head with answers sometimes. So I'm just happy to be on. Thanks for having me.
Duwany Bussey from Bold Marketing LLC on today's program.